Thank you very much for attending our briefing today. We'd now like to start Yamaha Motor Company's third quarter of fiscal year 2025 earnings presentation. Before going on into the presentation, I'd like to introduce the presenter, Executive Officer and Chief General Manager of Corporate Planning and Finance Center, Mitsuru Hashimoto. First, he will make an earnings presentation, and then he will go into detail by business segment. And then after that, we will have a Q&A session for the media, and then for analysts and investors. The presentation materials are available on our corporate website. So we now would like to start the presentation. I am Hashimoto from Yamaha Motor. Thank you very much for attending this presentation despite your very busy schedules. I would also like to take this opportunity to thank you for your continued understanding and support to our daily business operations. Now allow me to start my presentation. First, some key points. Please refer to page 4. Our third quarter performance maintained the trend from the first half of the year. In terms of revenue, it is in line with the previous year, but operating income declined. In terms of revenue, in our core business, we have seen steady performance. Especially in our motorcycle business, in the third quarter alone, we have achieved increase in revenue and profit. However, on operating income, we have booked impairment losses on fixed assets in OLV business, which we have been incorporated as risks. We have also seen the U.S. tariff impact becoming apparent, and we have seen a decline in operating income. As for our business result forecast for the fiscal year 2025, it remains unchanged. Business conditions are still challenging, but through rigorous management of costs, we will continue to promote select and focus initiatives to seek mid to long-term growth. Next, unit sales and inventory levels. Please refer to page 5. On the left-hand side table, you will be able to see the total demand and unit sales for our main products compared with the previous year. Yamaha's motorcycle business in Indonesia, Thailand, and the Philippines have exceeded market demand and remained strong. In the latest 3 months, in India, the performance was better than last year, and in Brazil, it was comparable to the previous year, so sales in main markets are on a steady recovery track. Outboard motors. Yamaha's sales in North America, especially in the mid to small horsepower range, it was quite steady. In Europe, in all horsepower ranges, it was better than the previous year. Inventory levels. Currently, the retail is moving very steadily in Brazil, India, and the Philippines, and therefore the inventory levels are rather tight. But we will be looking closely on the supply and demand trend in each region so that we can control inventory levels appropriately and maintain stable supply. Next, business results. Please refer to page 6. In the third quarter, our revenue compared to the previous year was 97% at 1,910.3 billion yen. Operating income 56% against the previous year at 112.4 billion yen. Operating income ratio compared to the previous year minus 4.3 points at 5.9%. Net income attributable to owners of parent compared to the previous year, 32% at 43.4 billion yen. EPS, 32% against the previous year at 44.65 yen. The effective exchange rate we used was 148 yen against the dollar and 166 yen against the euro. Next, our operating income factors. Please refer to page 7. As you can see, sales effect was minus 14.6 billion yen, but if you look at the breakdown, scale effects was minus 12 billion yen, financial services plus 1 billion yen, pricing, which is price increase plus rebates, was plus 38.9 billion yen, and others minus 42.4 billion yen. The net cost impact was minus 8.5 billion yen. Looking at the breakdown, cost reductions plus 14.7 billion yen, but with cost increases minus 23.3 billion yen. With an increase in R&D expenses, minus 22.4 billion yen, with an increase in SG&A expenses, minus 17.6 billion yen. Equity method investment gain and loss and others, minus 10.8 billion yen. Exchange rate impact was minus 11.3 billion yen, and tariff effects minus 3.4 billion yen. Next, our mid to long-term initiatives for growth. Please refer to page 8. Our company is holding exhibits at the Japan Mobility Show 2025, which is now being held at Tokyo Big Sight. The Yamaha booth has as its theme, Feel, Move. And we have 16 total models, including 6 world premiere models, which is being showcased for the first time. Electrification, hydrogen, and other multi-pathway initiatives are introduced through our concept models. We will continue to strengthen competitiveness in our core business segments through strategic investments by promoting new value creation.
Next, details by business segment. The third quarter revenue and operating income. Please refer to page 10. The businesses of motorcycle, marine products, OLV, robotics, financial services, and others marked lower revenue and lower income. SPV business revenue declined, and its operating loss was reduced compared to the previous year. The core business, MC business, and marine business. The motorcycle business maintained the unit sales and revenue on par with the previous year. While the currencies of emerging economies are on the path of recovery, the operating profit of MC business declined due to deteriorating model mix and cost increase caused by the inflationary impact. On the other hand, in the third quarter alone, MC business achieved increase in revenue and operating income, securing stable profits even under difficult business conditions, and it will continue to support the sustainable growth of the company as a whole. Next, marine business. Revenue and operating income exceeded the previous year's result, with the strong outboard motor sales in Europe and the US. But due to the lower sales of water vehicles, and revenue declined. And the fourth quarter, we will work to secure stable profits by implementing countermeasures against the tariffs and by prioritizing our activities. Now, let me introduce a new motorcycle. Please refer to page 12. In October, we launched the motorcycle, a super sports model YZF R9 ABS in Japan. It embodies the strongest track performance in the middle class to offer both the biggest excitement and the familiarity to caters to riders regardless of their driving skills and the stage of they are in. Next, water vehicle, and let me introduce another new product. Please refer to page 13. The new product, Crosswave, is the biggest in size in the industry with the multifunctional capability to be launched next year in the US. 4 people can get on board, and it has large storage space and stable deck. Accessories for fishing can be installed. It's great not only for cruising but also for fishing with comfort. We aim to win customers with this product in the PWC fishing category that is gaining popularity today. Next, SPV business and robotics business. Please refer to page 14. In the SPV business, domestic sales of electric assisted bicycles and e-kits increased, but its revenue decreased due to withdrawal from the finished bicycle business in some of its overseas markets last year and other optimization measures of sales areas. On the other hand, operating income increased due to rebound from inventory valuation reductions of last year and the reduction in SG&A expenses. Following the acquisition of Brose's e-kit subsidiary, its business was integrated in the newly established company, Yamaha Motor e-bike Systems, and it began its full-scale operations in August. In the SPB business, through selection and concentration, we aim to further improve profitability and competitiveness. Next, in the robotics business, the sales of semiconductor manufacturing back-end process manufacturing equipment for generative AI and advanced packaging increased, but sales of mounters fell below that of the previous year. As a result, its revenue remained at the same level as the previous year. And as for its operating income, the marginal profit ratio improved as a result of sales measures aiming for profitability, but due to the increase in the allocation of company-wide expenses as well as G&A expenses, operating income declined. Lastly, OLB business and financial services business. Please refer to page 15. In the OLB business, unit sales of RV and LSM declined, and R&D and SG&A expenses increased, and an impairment loss on fixed assets, which had been factored in as a risk, was recorded, and as a result, both revenue and operating income decreased. We will continue to review our cost structure and improve asset efficiency. Next, in the financial services business, despite an increase in sales finance receivables, revenue remained nearly the same as the previous year due to the impact of foreign exchange rates, and operating income decreased as the valuation gain on interest rate swaps recorded in the previous term turned into an valuation loss in this time. And this concludes the explanation for each business segment. The third quarter was largely in line with plan, and we will continue to operate steadily according to the plan for the remaining 3 months so that we can maintain a stable revenue base and ensure sound business operations. And that concludes the fiscal 2025 December the results announcement. And thank you very much for your attention. And that concludes the announcement of the third quarter result in December 2025. And thank you very much for your attention.